Hey everyone, in this video, we're going to be looking at some stocks with very high dividend yields. So if you're an investor that loves getting those high dividend payments, 8-9% dividend yields, this is the video for you. And I've carefully selected these stocks right here because yeah, some of these have like 8-9% dividend yields, and I'm going to show you the numbers for yourself so you can see that these dividend yields are actually sustainable, and some of these even have room to raise. They're already really high dividend. So I'm going to be literally showing you here's how much money they make, and here's exactly how much the dividend cost, and here's what they're doing with their leftover money. Some of these companies are even doing a lot of share buybacks. So yeah, if you like this kind of stuff, please do me a favor and drop a like on the video for me, and subscribe if you're new. I make videos like this all the time. And let's get straight into the first company right here. I think you'll like this one. All right, so this first company right here is Mo Ultra Group. We've all heard of this stock before, and check out the dividend. You get a 6.91% dividend yield with this company, and the valuation's pretty fair. Like if you look at the PE ratio to the left of that, they're trading at 12 times forward net income. So a pretty fair valuation on this company. And let me just show you the numbers. This is how much net income they're making every quarter. Now, the net income did fall to just 1 billion in the most recent quarter. If we zoom out historically, like look at this, they're making just over 2 billion of net income a quarter. This is from 2023. So let's just say they make, this is on average 2.3 billion of net income a quarter. So let's just say Ultra Group makes 2.3 billion of net income a quarter. Well, check this out. The dividend, the huge 7% dividend, only cost 1.7 billion of net income every quarter. So that's a pretty sustainable dividend payout ratio. Like they can't afford that. And how do I know they can afford that? Because if we go down here to the stock buybacks, they have so much leftover money that look at that. They're able to spend, 300 million on buybacks in the most recent quarters. Look at that. They did 600 million that one quarter. So yeah, on average, look at that. They're never issuing shares. This company is just returning money to the shareholder like crazy. So if we go to the total common shares outstanding, not only do you have the 7% dividend, but you own 2% more of the company than you did 1 year ago. Look at that. There's 1.69 billion shares. You go to like 2019, which is just 5 years ago, there was 1.86 billion. So that's actually really incredible. So Ultra Group, I believe this company has a sustainable 7% dividend. They even have a little bit of room to grow that. The only thing I would worry about though is see if this trend continues. Like the net income did just fall to 1 billion. I believe that was a one-time adjustment. The sales did fall 5% year over year. So I would just keep my eyes on that. But for right now, like look at that one quarter. They made 3.8 billion that one quarter. That the dividend only cost half of that. So anyway, that's Mo Ultra Group. Let me know what you think. All right, so this next company that I own is one that I have here in my Roth IRA. So this is ticker symbol Main Street Capital, and this is a BDC right here, a business development company. And what that means is literally by law, they have to pay out most of the income they make in the form of a dividend. So they pay a non-qualified dividend. So that's why I own them in my Roth IRA. But check this out. This company actually pays you monthly. They pay you 25 cents every month. And sometimes they make so much money that they pay you a special dividend. They've done multiple special dividends this year. And look at that. In between these two 25-cent months, you got paid an extra 30 cents per share. So if you look at the dividend yield right here, it says they have a 5.3% dividend, but the dividend yield is actually much higher when you include the special dividends. And let me show you how this company can easily afford this dividend right here. And the valuation was pretty fair. I mean, you don't really look at the PE ratio, but if we did the, net income multiple, they're trading at, 13 times forward net income. Pretty fair. And check out this right here. We'll just look at it from EPS point of view. So their dividend costs 25 cents every month. So 25 cents a month, we're going to quarterlize that. So the dividend costs 75 cents a quarter. So remember that. Dividend costs 75 cents of EPS a quarter. And look at their EPS every quarter. It's well over $1. I mean, this is incredible. Look at this. I mean, last quarter, it was $2. So the dividend payout ratio was like a 42% that quarter. So this company can easily afford the dividend. And let me just share with you that in looking at their net income. So look at that. They're easily making, let's just round it out to 125 million a quarter. It was more than that if you average it out. But let's just say they make 125 million of net income a quarter. Well, check out the dividend right here. It only cost $83 million. So that signals to me that the dividend is very safe, very sustainable, and that's how they're able to afford the special dividends. Like They kind of have to. Like, look back down here, they were doing more special dividends, another 30-cent special dividend back here. So yeah, that's Main Street Capital. I do own this one on my Roth IRA. This company basically has a bunch of loans with a bunch of company first lien loans, second lien loans, even have some preferred equity, preferred stock in some companies right there. So yeah, that's Main Street Capital. They've also had some decent stock price appreciation. Look at that. Since 5 years ago, it was 27. Now it's 57. I'm only up 3% on them. I didn't exactly buy the dip on them, but yeah, I like Main Street Capital as a dividend growth play. You get the monthly cash flow with that company, and I just received a dividend from them here. I'll just show you that because why not? Look at that. So I used to get $1 per month. This is per month, and then I decided to buy some more shares, and now the most recent month I got $2.50. So yeah, that's Main Street Capital, the BDC. All right, so this next stock we're going over is one that I actually own here in my Webull portfolio, and this is T. Rowe Price Group. I actually got 6 shares of this company, and they actually have no debt whatsoever. This company impressed me so much that I decided to pick up a few shares of this one. I think this is my second highest dividend yielding stock. So if you look in the middle there, they have a 5.55% dividend yield, and the PE ratio is just as cheap as all the other ones. They're trading at 10 times net income. So a very fair valuation. And let me show you how sustainable this dividend is. You're getting over 1.3% of your money back a quarter from their dividends, and it's a qualified dividend as well. So check this out. They're making, easy $500 million of net income a quarter. You see how it was down 15% year over year? It was actually a one-time adjustment. The net income actually would have been down like 2%. It shouldn't be down 15. But anyway, let me share with you this right here. So look at that. We'll not give them the benefit of the doubt here. Let's just say they make exactly $500 million of net income a quarter. Well, check this out. Their 5% dividend yield only has like a 65% payout ratio. This is a very fair and very sustainable dividend payout ratio. And check this out. Since the dividend is only 60% of their money, guess what they're doing with the rest of their money? Because, they have such a low payout ratio. They're doing a ton of stock buybacks. I mean, this is a company I want to own. One that has a high yield. And, look at their long-term debt right here. They have zero debt. They have no debt. So they don't owe anyone any money. So all the net income that they make, they can just do whatever they want with it. They made $500 million. Well, they can do the dividend. They can do buybacks. They don't owe anyone any money of debt. So they spent $200 million in the most recent quarter buying back their own stock. Look at that. They're never diluting you. They're always buying back their own stock. I mean, that's incredible. Let's go to the total common shares outstanding. Yeah, look at that. So not only do you get, the 5.6% yield, but you own 1% more of the company. So you have like a 6% total shareholder return. Like, let's look, there's 221 million shares that exist right now. If we go to 2019, there was 235 million. Look at that. The share count is just always going down. So that's good news. And they're actually making interest on their cash as well. How much cash do they have? So yeah, even after doing the buybacks and the dividends, look at that. They're still chilling on $2.9 billion of cash. That cash is earning them interest, and they have a sustainable dividend. So anyway, that's why I decided to pick up 6 shares of T. Rowe Price Group. The stock hasn't, been doing great either. I don't know if I expect this one to really outperform in the long run because they did have some slowing sales growth. That might explain the 10 PE. Look at that. The sales were only up 0.78% year over year. So the sales aren't really growing too much. They're kind of having their market share taken away by other brokerages and asset managers like a Robinhood. Robinhood is crushing it. I really regret selling a lot of my shares. I'm up 442% of them. And that's that's one thing you got to know about dividend stocks. Like with dividend stock, you're not really going to have a stock that returns 400 and 130%. But I still love the high yielding dividend stocks. They have a place in everyone's portfolio. It doesn't, if you're an older investor and want to live off dividends, these are some great picks. And, one day in the future, I almost bet I'm going to own more of like Mo Ultra Group, those kind of stocks, because I'm going to want to live off my dividend income one day. Because right now I'm just getting very, like Meta right here. I own Meta, and, the dividend's $2.63. I'm not really buying them for the dividend. I'm buying them for the stock price appreciation and the dividend growth. The dividend's like the cherry on top, but I still love higher dividend yielding stocks. So, hey, if you found any value in this video, please let me know in the comments, and subscribe if you're new. I'd really appreciate that. And don't forget, drop a like on the video for me. It really helped me out. And check out this video up here. I think you'll really like this one. It's my 1-year update of my Roth IRA. I kind of go over Main Street Capital again in there, so maybe you can skip past that part. But that's the 1-year update of my Roth IRA. It's exactly 1 year old. So check that out up here, and I hope you have a great rest of your day. My name is Nathan Robert.